Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Philippine peso weakens to yet another record at 59.46 against the dollar. The peso opens this morning at 59.40. We speak with Japhet Tantiangco of Philstocks Financial. Remittances from overseas Filipinos fell to a 6-month low in November. And we speak with a second-generation restaurateur who brought affordable luxury to the Philippine dining landscape. Eric Thomas D, the Chief Operating Officer of Foodie Global Concepts, joins us live. The peso hit a record low for the second straight day, pressured by a narrowing interest rate gap between the BSP and the Fed. The peso further weakened Thursday to close at 59.46 to the dollar. It hit an intraday best of 59.35 and an intraday worst of 59.47. One trader says the peso sank on the prospects the BSP will ease rates first before the Fed. While BSP Governor Eli Remolona Jr. is not sitting out another rate cut, he says it's, quote, unlikely given that the easing cycle is nearing its end. Another trader points out that modest wholesale inflation and strong retail sales in the U.S. have reinforced expectations that the Fed will keep rates unchanged. Palace Press Officer Claire Castro says despite the peso's weakness, the BSP sees no need for immediate intervention.
Ang Bangko Sentral ng Pilipinas ay patuloy na binabantayan ang lagay ng palitan ng peso kontra dolyar upang makakilos ito ng tama kung kinakailangan. Sa ngayon, kampante ang ating Central Bank na hindi pa sila dapat magkaroon ng intervention.
This Friday, the peso opened stronger at 59.40 to the dollar. Well, with us now for more is Research Manager of Philstocks Financial, Japhet Tantiangco. Well, it's good to have you with us, Japhet. Welcome back to the program.
Hi, good morning, I'm Cathy. Thank you very much for inviting me.
All right, so what do you make of the peso's recovery there, 4 centavos at the open?
Well, I believe the recovery today is just a little bit more of, a little bit of bargain hunting with respect to the local currency. However, if you're going to look at its trend, the peso is really still on a depreciating trend.
It is. Any indication of BSP intervention in a big way?
Well, as far as we can see right now, we will not be having any forceful BSP intervention. I mean, they've already mentioned it, repetitively, that they will not forcefully intervene in the local currency, in the foreign exchange market, that they will let the market continue determining the value of the peso against the dollar. Perhaps the BSP is going to look into it. It's going to look into it more moving forward. If the peso is already, a threat enough with respect to our inflation, then that would be the time that the BSP will intervene.
When you say looking into it more, what would that mean for implications on the easing policy? Because that's coming on February 19th.
Yes. With respect to the policy easing with respect to the policy direction of the BSP, of course, its primary mandate is still inflation. Second would be growth. Now, what's happening with the local currency, it's more connected with inflation right now. But so far, inflation, if you're going to look at the general picture, inflation is still well controlled. And at the same time, we still have this slow growth outlook. And so since inflation is not yet much of a threat, despite the decline of the peso, there's still the possibility that the BSP will ease policy rates.
By how much?
Well, as the BSP mentioned, we are already nearing the end of the policy easing cycle. I believe the BSP won't take an aggressive step. It's gonna be more of like a 25 basis points rate cut.
Okay, but what would that mean for OFW remittances? Because if there's one stakeholder that's benefiting from a peso's fall, it is our OFWs. But November remittances fell to a 6-month low ahead of Christmas.
Well, with respect to OFW remittances, I believe we will see a rebound moving forward, especially for the month of December, since it's the Christmas season. During Christmas, OFWs, they send a lot to their families, so that they can spend more during the holidays. And moving forward, if the BSP will ease policies further, of course, this would mean depreciation pressure for the local currency, which is positive for OFWs. I mean, if the local currency depreciates more, then the currency exchange will be in favor of what the OFWs will send home, and of course, this would mean more consumption power for the families that they're sending money.
Just as a final point, is it correct to say that this is just a strong dollar story?
Well, it's one, but we cannot attribute it completely to a strong dollar. There's still some factors which tells us that it's also a weak peso. I mean, number one, we are seeing the possibility of a further interest rate differential between the BSP and the Federal Reserve. I mean, the BSP might still cut rates in February, whereas the Federal Reserve might already halt in terms of its policy easing. Number two, of course, there's still the expectation of a persistent balance of payment deficit this year. This is as number one. We might not experience that much strong investment flows from offshore, given dented confidence amidst the corruption issues here in the country. And number two, we're still, expected to import strongly amid, heavy dependence offshore with respect to agricultural commodities and other capital goods. So there's strong importation expected. There's weak investment inflows expected, which is, in turn leading to expectations of a persistent balance of payment deficit, which in turn is weighing on our local currency.
Got that. A lot of domino effect there and headwinds. But thank you so much for the context, Japet Tantiangco, the research manager at PhilStocks Financial. Well, money sent home by overseas Filipinos fell to its lowest level in 6 months in November. Preliminary data from the Bangko Sentral show cash remittances rose more than 3% year-on-year to nearly $3 billion, while higher than same month in 2024. This was the lowest monthly level since May, when remittances stood at $2.6 billion. Despite the dip in value, November posted the fastest growth in 2 months, following a 3.7% increase in September. Land-based workers accounted for the bulk of inflows, rising 3.6% to about $2 billion, while sea-based remittances also grew 3.6% to over $600 million. Analysts say the slowdown is largely a timing issue. Jonathan Ravelas of Reyes Tacandong and Company said much of the holiday money was already sent in October, boosted by early gift remittances and typhoon-related assistance. Meanwhile, he stressed the month-on-month decline is not a red flag, noting remittances typically surge again in December. Metrobank's Nicolas Mapa said peso weakness likely supported remittance growth. That's as the currency hit record lows near 59 pesos to the dollar in November. A shortage of jobs is now the top worry of the Philippine business leaders, according to the World Economic Forum's 2026 Global Risks Report. The report said this signals fears that the economy may not create enough new employment opportunities to keep up with the labor force. Philippine executives also cited weak public services and social protection, misinformation, the unintended effects of an AI, and inflation as key risks. Meanwhile, top global risk over the next 2 years remains geo-economic confrontation, followed by armed conflict and extreme weather. In other news, Executive Secretary Ralph Recto and former PhilHealth President Emmanuel Ledesma Jr. are facing fresh complaints of technical malversation, graft and plunder, and grave misconduct. This stems from the controversial transfer of excess PhilHealth funds worth 60 billion pesos to the National Treasury. That's during Recto's time as Finance Secretary, a move that the Supreme Court recently declared as unconstitutional. A group of medical doctors and lawyers filed the complaints yesterday before the Office of the Ombudsman.
This involves public funds, and this reserved funds for PhilHealth were returned by the order of the Secretary of Finance, and this will be used for unprogrammed appropriation, which we may probably think about flood control and others, and we believe that these are violation of our laws.
In response, Recto maintained his innocence, saying he acted in good faith. Ledesma, on the other hand, has yet to comment on the matter. The headlines from around the globe. At the United Nations, the U.S. makes clear that, quote, all options are on the table to quell the violence that has gripped Iran for weeks. America has requested an emergency meeting and invited 2 dissidents to share their experience being targets of the Islamic Republic. The U.S. denies Iran's allegations that the 3-week protests are a foreign plot to give a precursor to military action. One diplomat tells the AP that top officials from Egypt, Oman, Saudi Arabia, and Qatar have spent the last 48 hours warning Trump that a military intervention in Iran will shake the global economy and destabilize the Middle East. In Taiwan, the semi-autonomous nation has inked a trade deal with the U.S. aimed at boosting semiconductor production in America in exchange for lower tariffs. Taiwan Semiconductor Manufacturing Corporation, or TSMC, will invest $250 billion for new factories in the state of Arizona. In exchange, the U.S. is easing tariffs on Taiwanese goods from 20% to 15%. Critics, however, contend that TSMC still has a significant footprint in Taiwan, and building U.S. plants is already part of its long-planned move. And in the U.S., Venezuelan opposition leader Maria Corina Machado has presented her Nobel Peace Prize medal to President Trump during a closed-door meeting with him. The Nobel Institute has already said Machado could not give her prize to Trump, an honor he has long coveted. The move is extraordinary, given that the U.S. questioned Machado's capability to run Venezuela when its president, Nicolas Maduro, was captured on January 3. The White House did not say if Trump accepted the medal. And you're watching Money Talks. Coming up, affordable luxury for Philippine dining. Our conversation with Eric Thomas D, the COO of Foodie Global Concepts, coming up after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Heading to the markets. Forecast beating earnings from TSMC, Goldman Sachs, and Morgan Stanley lifted U.S. stocks on Thursday. The Dow rose by 0.6%, S&P 500 and the Nasdaq climbed by 0.25% each. Benchmark 10-year Treasury yields ticked up to 4.159%, while gold prices slid to $4,616 per ounce. U.S. futures point to slight gains when the markets open later tonight Manila time. The Nasdaq advancing by 0.25%. Both the Dow and the S&P are up 0.1% each. Let's take a look at the Asian markets. They are trading mixed this Friday, breaking ranks with Wall Street. South Korea's Kospi is up nearly 1%. Australia's ASX 200 climbs by 0.2%, and Japan's Nikkei 225 falls by 0.33%. Let's take a look at our own markets on this final trading day of the week. PSEI opening this Friday slightly lower by less than 0.1%, 6,486. The stock market rebounded by 1.5% yesterday as investors cheered the World Bank's latest growth forecast for the Philippines. The broader all-shares index rose by 0.6%, with the local counters in the green, except for mining and oil. And to recap, the peso has opened today stronger, 59.40 to the dollar. The peso hit another record low yesterday at 59.46 against the greenback as the latest U.S. economic data sets reinforced expectations of a hold in interest rates. 10-year government bond yields ticked down to 6.05% from the previous close of 6.048%. In corporate news, Sun Life Philippines is set for a leadership transition as it prepares for a new chapter under a new chief executive. Our mobile journalist, Aimee Atienza, has details.
Sun Life Philippines will be seeing a new direction moving forward as Jonathan Juan J.J. Moreno will step in as the insurance company's new chief executive officer and country head starting April 1 of this year. Moreno will replace Benedict Season, who has served 8 years in the said positions. Season, however, will continue as a strategic advisor and chairman of Sun Life Philippines Holding Company and Sun Life Foundation for the whole 2026.
I'm really so excited about my retirement. I have big plans after April 1, but also I feel so reassured, so confident about leaving Sun Life Philippines because I'm leaving it to people, to leaders who are remarkable.
During Season's tenure, he focused on Sun Life's investments on digital developments that can improve Sun Life operations, having a 24/7 access with its clients and reaching a wider audience. This is what Moreno wants to continue while touching upon the issue of financial literacy awareness among Filipinos. Despite having a military background, Moreno says this will be a huge advantage as he takes on the leadership role.
So that's what I hope to be able to bring to Sun Life, the various disciplines that I brought from the military, being a regulator in terms of risk and controls, and then of course consulting, strategy, and then I took a company public, so from an issuer standpoint, and then fintech. So then bring it all together and help create magic here in Sun Life.
As Sun Life Philippines aims to maintain its #1 status for more than a decade, Moreno promises,
my leadership style has always been not to focus on what will change, but first focus on what will endure. So those that will endure are 4 things that I outlined earlier. Like Benedict said, focus on the client, focus on our employees, focus on our distribution channel around our distribution force. And of course, at the end of the day, we are a publicly listed company, financial performance should be important.
Kapatid Aimee Atienza, we are One News.
He is a second-generation restaurateur who brought affordable luxury to the Philippine dining landscape. Through Foodie Global Concepts, he's launched the Philippines' first Michelin-starred brands such as Tim Ho Wan, as well as Hawker Chan, Tsuta, and Cam's Rose. As Chief Operating Officer of Foodie Global Concepts, he's starting 2026 by bringing in a few more international names to the local dining scene. Well, with us now for more is Eric Atamas D. So good to see you, Eric. Welcome to the program.
Thank you, Cathy, for having me.
All right, so let's talk about the Christmas holiday shopping season. That must have been good for your restaurants, but tell us, what was it like from your Michelin-starred restaurants and the casual, fast casual, or even the cloud kitchen / tech?
Yeah, well, December has always been kind of like the best month for restaurants. As our niche category of affordable luxury, I think we saw a lot of the like they were talking earlier about the peso becoming weaker, so I think that's a double-edged sword wherein the windfall for the OFW is sending back. So we saw record numbers for some of our stores, meaning they've hit record sales in areas like Mall of Asia, where we see a lot of influx of the OFWs, balikbayans coming back. So that particular location, all of our stores there hit record numbers.
So it's all OFWs that brought up sales in your restaurants across all categories?
That's what we're seeing. I think more than, not spending, they're just being more precise or surgical about where they're spending their peso. And as far as us being in that value luxury segment, we kind of make sure that we're set up to be that precise choice, I guess.
But that's kind of a seasonal uptick, isn't it? I mean,
Correct.
how is it going to look like then as we start the new year? And as well, OFWs presumably will have more bang for the buck.
Well,
if the
reality
peso
kicks
continues to
in,
fall.
right? Reality kicks in.
Mm-hmm.
We've been in the industry for more than 30 years now, so we've known about these trends. So we know that what we're expecting is that from that highs of December, we're expecting a come down as we reach January and moving forward, right? So, but it's expected, and we know how to manage it as far as the trends are concerned.
All right. Well, tell us about the trends and how low can it go, given that we're faced with a slowing economy and possibly faster inflation with the peso weakening further.
Correct. For now, we are still okay with our inventories coming from the previous year, but moving forward, we're worried about, of course, with a lot of business that we're doing with Europe and the US, unfortunately, we're importing more than 50% of our products, right? So eventually it will catch up. But on our side, we don't want to pass that cost directly to the consumers because I think that's not our business model. So we will absorb until we can. But then we'll see how everyone reacts. But we'll be the last ones to increase our price if we can.
That's going to be a hit on margins. I mean, across all categories. When you
yes.
talk about the Michelin star down to the fast casual.
Definitely, it's going to be a tight squeeze, but cost management for us is kind of one of our priorities. So making sure that we're managing the cost, as long as everything's intact and well managed, I think we can manage.
Could you define what that is for us? What sort of cost measures you're taking this year?
Well, now we're just making sure that we're following all recipe costs. Like in the food industry, it's all about the food cost and the labor cost, right? So in the food costs, we know that a lot of the products are coming in more expensive, but there are ways where we can circumvent that. We do a lot of blanket ordering where we peg it on a certain US dollar mark or a euro mark so that we're able to make sure that we don't fluctuate on those sides. But yeah, those are the things that we're kind of doing as far as cost management is concerned.
What about staffing though? Are you going to be reducing staff?
Definitely not reducing staff. We're on a trajectory for growth, right? Even though that we feel that there might be less spending, but we have to grow, right? So we're growing more stores and definitely increasing our manpower. We're currently at around 5,000 people in the group. That was down by half when we were in the pandemic, right? So we're back at stabilizing. It's been about 2 years since we opened a new brand. So we're looking forward to this coming year to open a few new brands, right?
How many more?
On the pipeline right now, we have 2 new brands. One is 10,000 Coffee from New York. It's a coffee brand. And one is Momo Paradise from Japan. It's an eat all you can.
It's kind of counterintuitive, as you say, it's slowing growth that we're seeing, but then you're poised for growth. So how long is the waiting period then for your businesses before you see that growth, and how well poised will you be for it?
Like I said, I think for us as Foodie Global Concepts, we're able to carve a niche area for us in the affordable luxury market, right? At the end of the day, I think we're trying to give the most value, right? I think people defining expensive or cheap only comes out when the value was not achieved, right? We have brands like Yao Yao, which are premiumly priced, but you'll see lines out the door every day, and even with cheaper alternatives, right? So saying that is that we feel that there's still that opportunity. We are also entering the coffee market because we saw that there's an influx of coffee, so we'll try it out and see how that goes. But we're looking for something more scalable. So it's our first time in the coffee industry as well. And as far as Momo Paradise, which is our Japanese brand, Eat All You Can, it's our first time also in that market. But we're also, again, carving our own space where we're in that price point where it's not expensive, not cheap, and kind of balancing that out with value and quality.
When you speak about value, some diners would consider that trading down to go pure fast food. I mean, how do you keep them from doing that and go into yours instead for appreciating affordable luxury at a tighter budget?
Correct. I think, like I said, they're just more precise on where they're spending their money. So for us, it's the experience that you give. I mean, it's not all about, in restaurants, it's not about the food alone. It's now about the experience, making sure that they walk out of that restaurant feeling satisfied. So for us, value proposition means that aesthetics, ambiance, and service. I think making people feel that, you know, they're welcome, right? Easier said than done, but I think those are the key intangibles that can be added into the value proposition.
There's the cloud kitchen, so it's not necessarily footfalls. I mean, what sort of growth trajectory are you expecting in the online space?
So cloud kitchens were an opportunistic thing during the pandemic, but of course, as people reverted back into dining, which we all prayed for, of course, we also had to pivot, right? So what happened during the dine-in space that had to pivot into cloud kitchens, now we're pivoting back into seeing what our strengths are as a cloud kitchen, which is our kitchens and food production. So now a lot of our focus for the cravers is more on supplying food we're working with facility management teams that are, you know, buildings that don't have the capacity to produce food for their employees. So that's where we're seeing growth right now. And it's more bulk ordering, so we're producing about 5,000 meals to 10,000 meals every day. And we also have our online brand, which is the Six Pack Chef, which was a pioneer at that time as far as doing healthy subscription-based programs. So that's still doing very well for us.
All right, well, hoping to see more of those cues in the malls.
So
Thank you
Thank
so
you
much,
so much.
Eric.
Thank you.
Appreciate it. Eric Thomas T, the COO of Foodie Global Concepts. And before we go, here are some of the films you can catch this weekend. If you're up for a scare, 28 years later, The Bone Temple is now showing in Philippine cinemas. The post-apocalyptic horror film was shot back-to-back with its predecessor 28 years later in 2025. It also serves as the fourth installment overall in the 28 Days Later film series. Also showing in cinemas is the SpongeBob movie, Search for SquarePants. This adventure comedy follows SpongeBob as he proves his bravery to Mr. Krabs on a wild voyage with the Flying Dutchman. You can also catch The History of Sound, a sweeping love story starring Paul Mescal and Josh O'Connor. It was set against a journey through music, memory, and early 20th century America. Well, how about watch them all? That is it for Money Talks. I'm Cathy Yang. Catch us again on Monday, 9:30 a.m. Kapatid, we are One News. All sides, all the time. Have a great weekend ahead. I'll see you Monday.